Hi there, traders. Chris Keene from KeenFX. Let's take a look at what's happening heading into the FOMC rate decision. I have been sidelined because I normally trade looking for breakouts in the more exotics, New Zealand yen crosses and Aussie crosses, and it's been a little bit volatile heading into the end of the month. But with the FOMC on tap here, we could see a break of some of the ranges or an extension of a few. Let's just look at the New Zealand, the Aussie, the pound, and the euro to get a sense of what's going on. First off, we can see, just looking at a daily chart in the Euro USD, that this pair has been kind of sitting in a pretty narrow range. February, basically, with the low being pretty solidly created at 127.50 and the top of the range around 132.50, I guess around 133.30 right now, 133.20, 30. And you can see that the cross heading into the FOMC rate decision is sitting right here at trendline resistance after bouncing pretty solidly in the beginning, in the middle of July. And you can see this trendline resistance right here at 133.20. If we get a break of that, that could put a little more credence to the argument that we could see a bull run here up towards the 135 and then ultimately maybe all the way back up towards the 137 area. But what will be the FOMC obviously will have a lot to do with that, and maybe the ECB tomorrow. But for the short term tonight, we're going to be watching the FOMC, and if there's indication that they may be slowing down their bond buying programs, then we could see in the near future rather than the further into the future. And the GDP data didn't hurt this morning for that argument. You could see that we could see that the euro reverse course here and see a push back down towards the 130 area. So we're going to watch. This could prove to be another bounce off the trend line, and if we do get a push down, we'll look for a push back down toward, ultimately in the long run, towards the 127.50 area. So this is a nice setup heading into the trade. So if we get a break of this, clear break of the trend line, we could look for a continued move lower. If it looks like that the pair creates, basically breaks probably the low here around 132.19 area, we could see a push back down towards the bottom of the range. And the Great Britain USD is in a pretty much the exact opposite situation. You can see that the pair has been basically just chopping along, moving basically in its narrow fib range from this decline that happened in the beginning of the year from January to March. Basically, it's interesting. It's tested every one of the fibs, the 0.382 fib, the 50 fib, then all the way up to the 0.618 and back down. And you can see that the pair has been moving down relatively aggressively lately, and it has, let's go to a 4-hour chart, managed to break back below the, well, more importantly was the 152.50 level right here. But the pair did break below 152 today, and has been trying to move down more aggressively. I guess the first level of support would be down the 150.30, 150 area. So what we're going to watch to see is heading into the news, if the pair can get a break back up above this 152.50, we could see a cycle back up, and that would also probably coincide with a break of the Euro USD trend line. But if we do get the news and dollar strength in there, we could easily see this pair continue to move down, and the ultimate goal would be the 148.30 area over the coming time. I guess that actually wouldn't be the goal right away. Over the short term, we would continue to see a push lower, but also we have the BOE on tap tomorrow, Bank of England, and we have non-farm payroll. So we're going to be looking for it. I would be focusing on a shorter move at the moment. But if you did get a good significant move, you can move the pair to break even, and then just try to ride. Hopefully, the ride will coincide with the news will coincide with the game plan, higher or lower. And the last pair, well, two pairs. We're going to look at the Aussie and New Zealand, because the Aussie just continues to go low, it goes lower, and it broke below significant resistance, support today at 190 today. We got to keep, if we get a hold, close that, and the FOMC coincides, we could easily see a push down to 87.50 in the short term. Break back above, we could be in this range again, and it could favor a push higher, and we could just consolidate. But more importantly, would be a stop below this 90. It could favor a continued move lower. And in the New Zealand, this pair has just been moved up to test the 0.382 fib from its recent move down. Let's get moved down to start it in the beginning of February from about the let's say 86 level down to test this ascending trend line around 76. And now the pair has moved back up, but it has broke down below the 80 level recently. And just interesting to watch to see if this continues to move lower in sympathy, I guess, with the Aussie and just the weakness of the commodity currencies and just the Asian economies. So we're gonna watch to see if we probably get a break of the area around here, the 79 area. We could see a continued push lower, and there's no telling how far it could go. But what would be more interesting is if we have a little bit of strength in this pair and see if we could continue back up to the 50 fib at 81.70. That's what I'm watching heading into non-farm payroll, but more importantly FOMC and some of the exotics that coincide with it, the Euro New Zealand, Euro Aussie, and just the general setups they have heading into there, and hopefully get a breakout of a little bit of consolidation we've had over the last few days. All right, everybody, good luck trading, and I'll talk to you soon.